Okay, welcome everyone. We've got the last day of 2020. We're going to go through the charts. I don't expect a whole lot to happen today. I'm not seeing anything in the markets as of this morning that tells me there's going to be any kind of fireworks today. So it's likely just going to be a pretty muted day, and then we'll start out 2021. So what we're going to do is go through the indices. I'm going to point out there's one trade idea, a long trade on FDX, which is FedEx. That's been a short that I've talked about for a while. I see a short-term potential long, and so I want to point that out, and then we will wrap up. So as we go into 2021, if you guys haven't already taken the technical analysis trading course, link is in the description below. Check that out. That course was designed to really give everyone skills used to use technical analysis to your advantage. It's not meant to be a cure-all or give you trading ideas, but it's meant to help you find trading ideas for yourself, and then also give you the skills to manage a trade if the trade's going against you. Not all trades work. And so it's important to manage trades and know how to cut losers, cut the losses, and let the winners run. So that's all in the course. It's about a 5-hour course. Check it out. Link is in the description below. All right, so NASDAQ futures. We'll start out here. So we do have an uptrend line right here on the futures in NQ. This is an hourly chart. And you can see that we basically have now broken that uptrend line. Again, last day of the year, though, so low volumes, kind of, lots of false breakdowns. It's just not necessarily the kind of, it's hard to take a breakdown on the last day of the year with any conviction. So I just want to point that out. But that is a breakdown. We'll see if, maybe they recover that. Let's look at the tech ETF, triple Qs. So on this one, we've got this bearish rising wedge right here. And again, breaking down, not impulsive though. And that's to be expected because there's just no volume today. So there's just not nobody's basically trading. And so whether that, we'll see what the first of the year brings. Maybe it gaps down and that's your sell signal. But as of right now, it's just not a high conviction sell signal, even though it has broken this uptrend line. Again, if you look at the daily here, we do have negative divergence. It's been building for quite some time. So that tells me that we're likely to get a breakdown, but you need that sell signal. And yeah, that doesn't look like it. So we'll see. Maybe there's more selling today. But as of right now, slight breakdown, not impulsive though. SPY futures. All right, so looking at the hourly here, we're just continuing within this bearish rising wedge. And here's the thing, all this price action here on this hourly chart has been the holiday trading. So you get a false breakdown, they recover it. You get a false breakout, it sells off. This is the price action that you see during this time of the year. So that's why breakdowns and breakouts are low conviction, low conviction moves. So we're going to have to wait till next year, most likely, to see where this thing wants to go. And so let's look at the SPY futures, the SPY S&P 500 basically ETF, and you've got this upward price channel, and we're just still within that price channel, so no change basically. But you look at the daily and big negative divergence on the RSI. Here's the PPO. You had the bearish crossover, so momentum is still pointing to a trend change, just no sell signal, so just got to sit there and wait for it. Something that I don't point out too often, but you've got the small caps IWM. So they actually broke down the other day. This is a daily chart here. If I go to the hourly, you can see pretty clean bearish rising wedge right here. Broke down here, was a false breakdown. They recovered it, broke down again, and so far it hasn't been recovered. So I would say that's bearish in the fact that they haven't been able to recover it. The only thing is I just don't like that it's taking place this week. It's not super impulsive either. So again, I'd prefer to just wait till the new year and see what the market wants to do with this at that point in time. Let's look at bonds. Again, important to watch the bond market because everything, for the most part, pivots off the bond market. The bond market's about 10 times the size of the stock market in terms of money and money flows. So it's important to know what's going on with that market. Here's TLT. This is the long-term treasury bonds. Again, bullish divergence. It just continues to build. This is what the markets basically are coiled up for, some sort of a big move. And what I can read in the charts as of right now tells me that stocks are going to fall and bonds are going to go up. That's what this chart tells me, because you've got bullish divergence building and just no catalyst. So it seems like the market's waiting for some sort of a catalyst, and then it's basically coiled for that. And usually when the markets are coiled for a move, they'll bite onto any headline. Basically, the market starts selling, and then they'll slap some headline on it and say, this is what happened, this is why. When in reality, the markets are they just want to move in those directions. So that's what I see. I see bonds going up, potentially TLT. I would look to target all the way up here as kind of a profit target, or potentially even higher. But as of right now, and that's 171. So from there to where we're at, that's about a 9% move. So that's what I see in the charts. What I would look for, you have this downtrend line right here. It's had a couple reactions. Perhaps a break of that trend, some sort of an impulsive breakout would be the buy signal. And from there, I would look at up around that 172 area as kind of a first profit target. We just have to wait for the catalyst. It's obviously not going to happen likely during the holidays. Gold continues to kind of chop around. There's just not a whole lot going on. Nothing's really changed from my perspective in gold from the last few days. So we'll pass on that one. The dollar made a new, all right, let me zoom in here. This is a little bit, so that you can see today, the dollar made a new marginal low right here. And that's a divergent low. So again, we have bullish divergence on the dollar, making new lows in price, but it's not able to make new lows in momentum. Also, if you look at the PPO here, bullish crossover remains intact. So again, this is telling me that there's a trend change coming in the dollar, and that the dollar is going to move higher. And if it does, I think we could see this 96 area as the major level of resistance. Look for a move in the dollar. Look for a stock market sell-off if that happens. XLV, no change, just kind of chopping sideways. You can see all this sideways trading action. Nothing to really report there. Same with XLF, no real change. Just kind of, grinding around this area up here. Small little moves. There's really nothing going on, so we're just kind of waiting. We continue to have negative divergence. So in XLF. So all these new slightly higher highs, you can see today 0.5% are divergent highs. And on the PPO, we had that bearish crossover in momentum right there. Momentum's pointed down, starting to kind of level out. But again, bearish indicators while price is just kind of grinding around. So I'd expect to see one big red candle, and that could be a sell signal. If you get that big red impulsive breakdown, I think we're going to go a lot lower, likely to gap fill down here at 25.40 and potentially lower. All right, sorry, I had a quick interruption, but XLE, this is the energy sector, and no real change over the last few days. This is about a 2-week time right here, and it's just basically been flat. So to me, it looks like it's flagging. Looks like it's going to break down again. First level of support, 34. It's about 34.30. So we'll see what happens at that point. Obviously, on the daily chart, I pointed this out. We had negative divergence right up here. And this was your sell signal on this breakdown right there. And so far, that's continued to work. Redfin here on the hourly chart, you've got, the small little uptrend channel right here, or trend line, and we're starting to break, but again, not impulsive, so got to wait to see some more conviction on that. Now, if we get some sort of big sell-off into the close, then that would be with some conviction. So Etsy's kind of interesting, and the thing is, you had a sell signal right there. That's a pretty impulsive hourly breakdown, and we've just been flagging a little bit. So you can see here on the daily chart of Etsy, you have this uptrend channel right here, and we have negative divergence. It's right there. There's your negative divergence. So this is all divergent high price action. You got the sell signal on the daily. That's a nice impulsive breakdown. Just been flagging out. I suspect it's not going to break down today, and maybe that'll happen the beginning of the year. But what it looks like right now is it's flagging out, and then you're going to break down. So the next sell signal going to the hourly, I think, would come on an impulsive break of this flag. So we start to break down, and that means that we're likely going lower. So what happens today? Well, they probably are going to run it up to the top of the flag, and that might be an objective area to actually take a short position. It's an area that's kind of right within the breakdown area. So that can happen. Obviously, they could run up and do a back test and then fail. We don't know what's going to happen, but the the momentum's pointed down. If I look at the daily, you can see here's the PPO. We had a bearish crossover recently on the daily, and we have negative divergence on the daily, and we have a break of trendline support. So in general, looks good. Looks like it wants to go lower. We'll watch this one. Okay, FDX, there's a possible long trade here. It's not my favorite, but I just want to point it out. I'm likely not going to take it because in general I'm kind of bearish on the indices. But you can see here on the hourly chart, we're starting to build bullish divergence right here on the hourly. And so all this little price action right within here has been divergent lows. Momentum starting to pick up some steam. Now that's just on the hourly. So that tells me we possibly can get a bounce here. Maybe we pop up, hit some sort of resistance. You can see it looks like we have a little bit of resistance right there. So maybe a bounce up to 268.70 and then we roll over. Because on the daily, there's no divergence. We don't have bullish divergence on the daily. It's just downward momentum. But we're pretty oversold, so a little bounce could be just a bounce trade. Obviously could turn into a lot more. Or might never pan out. But that bullish divergence on the hourly is telling me that we're likely to see some sort of a little bounce. This is pretty sustained selling. So to see a little counter trend bounce, I think would be possible. If we get the bounce from where we're at right now, that's a move of about 3.5% up to there. We could bounce all the way to the top of this range, up around 276.50. So watch for that. Okay, let's wrap up looking at volatility. So because the markets are really coiled for some sort of a move, I think it's markets to the downside, bonds to the upside, dollar up. That's what the charts tell me. It doesn't mean it's going to happen tomorrow, or it might take a couple days or even weeks to get there. But when it does happen, it's likely to be a pretty powerful move. And so I'd rather, personally, I'd rather look to play that powerful move than maybe play what looks to be the tail end of the current trend. And let's look at volatility here. So you can see that volatility, although the markets continue to make new all-time highs, volatility is not really selling off. It's just kind of basing out. We're just holding in this area right here. And we're not going up, but we're also not going down. So volatility is relatively elevated given the fact that the markets continue to move higher. Usually when the markets are moving higher with market consensus, you'll see volatility falling. And we're just not seeing that. We're seeing volatility kind of holding in there, which means people are buying put protection. That's essentially what it means. You don't see the mad dash for put protection. That usually doesn't come until after the fact, when everyone realizes that there's a change in trend, then you see the mad dash for put protection. But you do see there are some buyers of put protection, and that's why volatility is not necessarily falling. So this could potentially mean that we're going to get, again, this is just signaling to me that potential for another move. And also, if you look here, if I delete this line right here, you can see right there is bullish divergence as well. So there's bullish divergence. You can see that today we made a slightly new low right there, hit the kind of equal low of previous right back there, and it's on higher momentum. So bullish divergence starting to show up. We're really holding this 1034 here on this UVXY. That seems to be the near-term support. Look at the momentum here on the PPO. We had a bullish crossover back here, and it's pointed up. So, all in all, I'd say this looks like we're going to get a spike in volatility. And again, that just all goes with everything I'm seeing in the charts. There's multiple, multiple things. We just need the catalyst. The market's not going to do anything until it gets that catalyst. We don't know what the catalyst is going to be, but it's set up for certain direction. And I pointed that out in the video. So that's all I got, guys. Have a good New Year's. I'll catch you guys on the next one in 2021.